Welcome to today's Digi-Tools in Accrual World episode. This episode has been made possible by Xledger, who represent mid-market accounting firms who are also making sure that they've got a lot of features that are outside of the norm of what needs to be done when you're in the small business side of things. And actually, they've got a very good look out this year on some of the new partners that they've brought on board to Xledger. We are switching things up again. And this week we have a new co-host joining us. We have Billie Mcloughlin. So Billie, say hello to everybody on the podcast. Hi. And Billie is joining us, and she's going to be talking more about some of the stories today, which we have covered. We spent a lot of time talking about AI. Once again, as always, this is dominating our space. Some of the interesting raises that are taking place, debates that have been waging in a public forum on LinkedIn. And on top of that, we've covered some really practical applications, practical features in applications that we know, we love, and we work with. John, give me your top practical app news story today that you saw come out.
Top one, I think it's going to be briefcase on the accruals functionality. I think we'll deep dive into that, but I think that's quite a cool little update to the month-end process that we've been talking about.
Brilliant. And Billie, from you, what did you think of today's stories?
Yeah, I think it's just you've got to kind of cut through the noise and figure out what's actually useful and what's really great marketing from some of these organizations. So what I would say is there's a lot of money out there that's been spent on AI, so it's obviously going in one direction.
Yeah, I would agree. And my favorite story is definitely from Active and the free agent tie-up. So congrats to those guys. Outside of that, Billie is also joining us because she has done a lot, if you haven't already seen, on Friday AI.
Yeah.
How do you say it, Billie? How do you say Friday AI?
Friday AI.
Friday AI. So if you haven't already caught her on her Friday AI, then you can also catch something that she's working on, which is the AI Practice Academy that will be out later in the year, but they are going to be at Accountex this year, Billie. So tell us a little bit about that.
Yeah, of course. So what we've seen is that a lot of accountants want to use AI, but they're not really sure where to start. They need a bit of structure on guidance on using the different tools. So that's exactly what we're trying to provide, is kind of like that structure on using some of the tools that are on the market. Not necessarily anything too niche, nothing too difficult, just getting used to using them with a bit of confidence and not worrying too much about things going wrong.
Well, we look forward to obviously seeing a bit more on that. In the meantime, we'll leave you to the episode, and we hope you enjoy this one.
Okay. I've got some exciting news from Allica Bank, which is that they have just become the UK's latest fintech unicorn. They raised $155 million in their latest funding round, so they're going to be joining Revolut, Monzo and Starling as fintech unicorns for the last couple of years in that exciting space that we're seeing with the challenger banks. And I guess this is probably one of the more interesting ones because Allica Bank have kind of predominantly focused on business banking, whereas the other banks have been much more across both commercial business banking and your traditional sort of personal banking. And Allica also have a fairly sizable lending part of their business as well, which as Indi would always tell us is like the most important part of a bank. It's the thing that really fires the business and gets it going. So super exciting. So this is Series D round, and basically off the back of that, the final valuation will be $1.2 billion, £890 million. So I guess not quite a British unicorn, but as far as the Yanks are concerned, it's all about. And this is going to power more expansion into Northern Europe in particular, which is an interesting move because I would have thought that people would have gone to the US market potentially as an opportunity, but powering Europe is a way to go. And I guess a lot of similarity in terms of regulation and potentially like the way that businesses will interact with you, whereas it's probably slightly different in the US. So there you go, very exciting news, and well done. Kudos to the Allica guys. We know them very well and we've worked with them in the past.
Are we speculating that they will actually make it to the IPO table, or do you think they'll get snapped up before they get to IPO?
Oh, well, that's a good question, actually. I mean, I don't know. I mean, I would imagine that it would seem likely that they want to IPO. I mean, it seems that that's the direction of travel for their competitors or the people that I mentioned, like Revolut and Monzo, etc. And I guess, at that kind of value, who would maybe have the appetite to acquire them along the way? Probably one of the bigger high street banks, but then would Allica want to do that in terms of aligning themselves around basically who they're accusing as being sort of their stuffy competition?
It's whether we start rumours now, in which banks do we think would be willing to buy Allica? Got to be a big one, very tech forward, because I doubt a high street bank will be able to manage to integrate that inwards.
Santander.
No, definitely not. I can't see that happening. Maybe if they push more into Europe, you're probably right, because that's tricky for them to get a foothold. But if they do push more into Europe, then maybe, the big one in France, what's that one called? Crédit Agricole, that sort of one. Who's pushing more inwards to the UK? That's someone who might want to buy them.
No one really stands out anymore. There were a few European and then Far East banks that were doing it, but no one's really making a lot of noise at the moment. The only people that are still knocking about and doing exciting stuff is Airwallex, really, if you are an international lens.
Maybe. I mean, that to say, it's a really great success story, and actually we are behind them all the way. Like you said, I think lending is critical to any business, and their push into Europe, I don't think it is that unusual. I think better to choose Europe than the States. Most of what we understood about Allica was it always appealed to businesses down the back of an industrial estate who had really long been forgotten by the high street banks. And most of those businesses trade with Europe. So it makes a lot of sense that they would want to then extend what they're offering to their own customer base a bit and service them a bit better by going into Europe.
So next up, we've got Stacks, they're just talking about funding. They've just raised $23 million in their Series A funding. For those of you that haven't heard of Stacks, it is a UK-based fintech, although I think it was actually founded in Amsterdam. The headquarters is now in London. And they help with things like closing, reconciliation, journals, and those type of workflows. They're claiming to have more than 30 customers. I know, sit down, 30 customers across the US, UK, and Europe, which it just feels like a really mad flex, but they must be huge companies, I guess. They say that they are helping to reduce close cycles by around 50% in terms of timing. And I know one of their big companies is Vault. So if you think about that 50% across an organization of that size, obviously they are very, very valuable to them. So alongside that funding, they've also launched a new product, which is the AI Flux Analysis, which identifies transactions and variances between them. And interestingly, they say that it helps with reviewable explanations, which just proves that even though they're producing these products, they understand that they still need to be reviewed by accountants. So this does, of course, mean that John's prediction last year was right, that month-end close reconciliations and reporting, the plumbing of finance, are now becoming targets for the AI-led redesign. So, John, I'm sure you've not heard it many times before, but it must be lovely to hear that.
Well, you know what, Billie? The first time recording our podcast together, and I'm actually getting a compliment off you. Which is great. So I'll take it. I mean, who knew that I'd be? First time. There's a first time for everything, right? Isn't it?
I feel you went for the low-hanging fruit. You already knew kind of all was ripe for picking. Everyone can see it going that direction, but it is pretty interesting. Different approach from what we saw David Tuck and Mayday doing last week. I think it was that we announced their acquisition of then going right the way through on the month end. But interesting. It's interesting. I've also got a little top trumps for you on that, because I've got Basis, which has raised $100 million for accounting agents, and one of the biggest funding rounds that we've seen in accounting this year. And they've done it at a valuation of $1.15 billion to accelerate its AI platform for agents that are designed specifically for accounting firms. I know that we've had this all before, and we're hearing a lot more of it now. The company this time is saying its agents can work across CAS, tax, audit and advisory workflows, and it's already used by 30% of the top 25 accounting firms. I like the way that they've said that, the top 30% of the top 25 accounting firms. It makes it sound like a bigger number, Billie. When you said sit down, 30 clients, I was like, well, I think these guys have just got the math in a bit better.
I think 7 just doesn't seem as... If you just said 7, you're like, oh, wow, single digits.
I mean, technically it's 7.5, right? So they rounded up. Or they
We've
round it
got something
down,
in the
whichever way it
pipeline.
is. Yeah.
They're halfway through the pipeline. That's it. They're mid-funnel. The goal is on this one, not just automation of tasks, but what the company calls long horizon agents. Long horizon agents. So systems that complete multi-step accounting workflows like finishing a business tax workbook end to end. And we're moving from AI that can help accountants write emails or summarize documents to AI that sits directly inside the production workflow of an accounting firm. So I think it's another easy, quick one to assume that the tool like this will replace the accountants. But I think the interesting thing is that it's being adopted by the big firms and not eliminated by them. So I think one thing that they're claiming is what we've heard a lot of is increase the throughput per professional, because that's what a lot of these things are designed to do. Intelligent people using intelligent tools. So therefore, one accountant might supervise like up to 10 automated workflows. And it just really is a leverage shift in terms of what they're expecting the accountant's role to be in terms of oversight, judgment, and client-facing work. Very, very in keeping with what we're hearing a lot of coming out down the track. And I think there's a few more to come, really. What do we think,
I love
John?
that idea of intelligent tools used by intelligent people. What happens when stupid people use them?
We're all
Maybe
doomed.
we're increasing our risk margin for errors.
Well, given the languages that they use, what was it? Horizon? What I thought I just tuned out because it was all marketing BS. But I mean, it
Long
sounds like
horizon. Long
there you
horizon.
go. So maybe stupid people using the product, increases their risk envelope or something, or the risk aperture. Who knows? Some random crap like that. Anyway, I'll get off my high horse and move on to something a little bit more practical. Active Work Papers have announced a whole bunch of updates and changes and stuff. And I guess the big one probably is the free agent integration. As always, the team at Free Agent are smashing through high quality integrations, and Work Active obviously high on their list in terms of what they want to do and build there. They've also added a group overview sort of feature, so that when you're managing groups of clients which are all like knitted together, it's a little bit easier to sort of see where things are up to. Because particularly, I guess, if you've got a big list of clients, they're all done in alphabetical order, and you've got a group made up of one business in I don't know, at the beginning of the alphabet, one business at the end of the alphabet, you're going to sort of see that spread across a big page. So to be able to sort of bring together and aggregate client groups makes life a lot easier. And I guess also from your firm management point of view, you could also do the same with sort of like maybe relationship groups. So where you've maybe got like managers running a portfolio of clients, maybe a partner could group clients together and sort of see how a particular manager is performing. So I think that's a really cool little update. They've also just added some simplifications to the work papers, so that where you've got maybe I guess maybe like a director, shareholder of a small business that has fairly simple requirements, you can just like whip through those work papers a little bit more simply. It just makes life a little bit easier. And then they've been adding functionality around monthly management accounts and adding that into kind of like the broader reporting packs and stuff that they've got there. And I guess that probably brings them into line with probably Silverfin as well, who've offered that for a long time. And then, excuse me. And then last but not least, a few other bits and pieces. You can now drill down into transactions in Xero, so you can get back into the real detail and nuggets of information that you're seeing. And then they've added some additional integrations and some new formats. So they've now got a company's house integration. You can also create and submit FRS 105, 102, 1A, sole traders, partnerships, LLPs and dormant accounts, and some additional reporting if you live in the Channel Islands, which is very exciting.
So I think what Active have done here is really smart, because when we think about the sort of everything we're hearing about AI and as becoming reviewers, this is helping with that. So helping with that transaction level of jumping into the detail when we're reviewing something, or when we're doing a set of papers, like having to explain to a junior, you can ignore the HPA agreement section and the reconciliation around it because it's just a director-led only business. So I think those things are really actually great in terms of the fact that we're helping the practices get more out of their team, like we were just talking about.
Yeah, I'd agree. It's definitely anything that helps to cut through the noise, I think, particularly as you start to add, if we're going to add autonomous systems or automation or faster, more effective automation into our processes, at the moment, at least, firms want a human to review that at some level and to be able to just check that it's not gone completely rogue. We've obviously seen this a long time ago when we started using OCR, and maybe some of those mappings or the extraction didn't always quite get it right, and you could quite easily just smash like hundreds or thousands of invoices into the wrong nominal code. And we run the same risk, I guess, with agents doing some kind of automation in the background, whether that's around invoice processing, prepayments, accruals, etc. So I think, like you say, Billy, anything that helps a firm to kind of drill down into what's going on, the activity is really important.
Yeah. So next up, I've got some news from Zama around their AML, which is going to help you sort of collect and verify ID much, much easier. Now, I'm a huge fan of Zama in the respect that I feel like they're a product that really stay in their lane. So the stuff they put out online is very relevant to what they do. Their education around everything that they do is brilliant. So Zama's got a new client portal, which allows you to look at a consolidated view for your client. What's great here is that the link doesn't have to go as an email, because I think we're all struggling with getting clients to read emails. So you could even put this on a landing page, which a lot of practices are now doing. So when you get to that onboarding part of that process, you've got a link there that they can sort of access on that landing page. And it just means that less back and forth and less chasing. So what this new client portal does is it creates requests for each director uniquely. So you might need a selfie, for example, from one director, but you've met one of the other ones in person, so you might not need that. And you can generate that link to send just to that one on their outstanding actions. I think when you've got multiple directors in a business, it can be quite difficult on who to chase and when to chase them. So it kind of puts the onus back on the client in a respect, because you've both got access to this area that says what tasks are outstanding. Just essentially they can see that, and you're not having to chase each one individually. So between AML regulations, economic crime, the rise that we're seeing in kind of fraudulent activity, and the increase in due diligence in a sector that as accountants we really struggle to charge for, we're seeing all this extra responsibility we can't charge for this process. It's really great to see Zama bringing in some areas that help really streamline this and reduce the time it takes.
Yeah, I love that perspective, Billy. And like you said, there's some simplification there of process that at least, we're all seeing that the change in the system is more that the accountant is someone has to be the cornerstone of that compliance piece and still hold the line. So the fact that they've made it a lot easier to do, in theory, hopefully makes us all better off in the world, just in general, while we lose our sense of identity and it becomes trickier to spot the deep fakes.
Exactly.
Awesome. Well, moving on from that, I've got a little update from Ruben Steenkamp. It's one of the co-founders of Briefcase. And actually, when I was looking this up, here's a little humble brag, but I feature in the banner on the top of his LinkedIn profile, which I didn't realize because I've not been on his LinkedIn profile for quite a while. And I was like, that was unexpected. I think it's actually about a year old because I think it's from like Fab from last year or something, but there you go. But the big thing that Briefcase have announced, not my feature on Ruben's banner, is they've added accruals functionality to the product. We've known that this has been coming for a little while because they've been working on building out this sort of functionality incrementally across the platform. And now it's there and it's ready to go. I haven't actually played with it yet, but I'm really looking forward to seeing it in action and actually seeing how it works. But the concept behind it is that as you utilize Briefcase, you're uploading your invoices as usual. It will start detecting recurring activity and recurring expenses in the background. And then when you get to month end, if an invoice hasn't been provided for that month, then it will suggest that maybe an accrual is needed. You can then review that and just double check that it's valid and it's correct. And then it will automatically post that journal to Xero or QuickBooks, depending on what you're connected to. And then when the invoice does arrive, I assume maybe the month later or a couple of months later, they will automatically reverse that accrual and do that your catch-up adjustment that you'd have normally in your accounting. So I think this is pretty neat. I mean, I guess the key test for this would be how accurate that kind of your recurring your identification is in terms of making sure that it picks a cadence, because if you've got some suppliers that maybe get a little bit out of whack sometimes, not just monthly or quarterly, but maybe every 2 months or something, you could see that it might fail. So I'd be really interested to understand how that logic works. And then, of course, the other thing will be just figuring out whether or not that accrual would be based on, like, say, the previous month's invoices, or maybe it's based on an average. Because I guess if you kind of look at, for example, maybe electricity and gas costs, we know that those kind of spike during the winter and then drop down during the summer. So they're not always consistent, but something else would maybe be a little bit more standard. So there's lots of nuance to this, and nuance that normally us humans try and identify and pick up from what even we don't get it right. So, like I say, really interested to see how Briefcase have delivered this and what it actually looks like in practice.
The thing about Briefcase's approach in the past has probably really held them in good stead, because this is a great release. In the past, what they've done is release something hand in hand, hand in glove, with a few accounting firms, trained it, iterated, trained a bit more, iterated, and then really been able to launch it gun-ho. So I think now they're speeding up that cycle of being able to release something that's in a better state. You can just see the difference in their approach. And we saw, happen with, I guess, with some others in the space, like in the last few weeks. Briefcase seemed to be really on a winner in terms of deepening their functionality very, very quickly. They must have some very loyal accountants in there to help them just again, to build and release things that are of good quality and deepening their own relationship into the accountant's cycle of workflow of activities. Don't you think, John?
I think so. I mean, I guess they've got the benefit of being quite small still, and so they've got the ability to be very dynamic. They're obviously built straight into GCP and built for the AI world, so they've got that ability as well. They're not like some of the other older competitors who are having to pivot a little bit more a little bit more in terms of technology. But we know that they are partnering with good people. I think Lara, who does a bit of co-presenting with us occasionally, I think she's been working with them in the past as well. And I think Ruben can be a little bit Marmite sometimes, but I think that helps because he's not sort of encumbered by a point of view, because he's not an accountant or a bookkeeper, so he's not encumbered by a point of view. He can just go off and build something. And then I think what he does quite well is uses that sort of extra expertise that's wrapped around him to kind of just to sort of really focus in on the end part of the product. So he probably has a crazy idea, but then really narrows it down quite effectively. So yeah, I mean, kudos to them. We've got to keep this market moving forward, and we've got to keep this market super competitive because there's a huge amount of opportunity. And as Billy said, I got it right for once. So this is where we're all heading.
I do think as well with Ruben, his transparency is much appreciated by the industry because people can see we're almost building along with him. And I think people enjoy sort of being on the journey.
Okay, so another quick update as well from another one of our exciting partners and people that we've worked with in the past as well. So iPlicit and Cresco have launched an integration, and Cresco have got form for this because, of course, they've done this in the past with Xero. And effectively, what they're doing is iPlicit are now using Cresco's API to bring embedded payments into their platform. And this comes at the same time as iPlicit have literally just rolled out a whole new branding scheme as well and everything else. So they've gone through a bit of a rebrand to sort of modernize their look and things, which looks really cool. But effectively now you've got this product called iPlicit Pay, which is Cresco powered in the background, allows you to pay suppliers in one go, it allows you to schedule payments in advance. You can delegate approvals without having to share bank access, which is always very important and particularly challenging maybe for larger mid-sized businesses that will be using a product like iPlicit. And you can track payment status in real time, which is obviously really important as well when you're kind of like managing either the ledgers on both sides, or maybe even if you're a little bit more complex and you have somebody fully managing the cash function in the business. So yeah, all there, ready to go, live in the product. And if it's as seamless as the experience you had when Xero did this with Cresco in the past, then I'm sure it'll be an absolute winner.
This is huge. This is great. Cresco have positioned them as the silent infrastructure to quite a few partners now. There was one where I thought, I wonder where they've gone actually, because it was super loud in the accounting space. It's been very like direct to accountants. I remember seeing, people wearing the swag everywhere. And then suddenly it was just like they dropped off a cliff. And, there's always that worry as soon as that happens that maybe that app, maybe that tech is about to disappear. But what I really like is they must have at some point recognized their go-to-market metrics and just said, okay, this doesn't quite work for us. We'll be the silent infrastructure. Let's get deeply partnered with a handful of strategic alliances. And then they're doing the same again with iPlicit, who are on a winner at the moment. And quite literally on a winner. They've won multiple awards over the course of the last year, and they're proving that the mid-market really does exist. So it's great. Great news. Okay, I've got something. So Ditto is, and I'm sorry to do this, I'm taking us back to AI for a moment. And I'm sure, that we can end on a brighter note. But in this case, Ditto is a software that I came across that said they promised to free the accountants. So John, I didn't know that you were trapped, but
Me neither.
I'm very, very sorry. There is a classic AI startup promise about to happen in T-3 seconds. Ditto has said it will be the technology that will free the accountants, such as John Toon, by automating routine accounting work so professionals can focus on higher value advisory services. I just get so bored of that story. It's everywhere. And again, it's a promises to eliminate manual bookkeeping, automate the transaction processing, reduce compliance workloads. And to be fair, there's some progress that's been happening. So the last decade for us has been about digitizing accounting data. And I feel like this decade is now more about making that data as autonomous as possible so that the system can categorize, reconcile, and then analyze with minimal human intervention. So the ambition behind the platform is clear: shift accountants away from the production work and towards strategic advisory. But I just want a little reality check from you both on this. My view is obviously accountants don't just spend the time in the books because the technology isn't good enough. It's sort of more about accountability and having to make sure that data is right, and someone has to stand behind the numbers ultimately. So while technologies like Ditto will certainly free accountants from tasks, I don't think the profession as a whole is defined by tasks and is more defined by the responsibility for financial truth and trust. So interested to hear your perspectives on Ditto.
I would say they claim to get inside tools. It's nice that we're not getting like a new product. It's almost like a new tool to use, which can use the products we've already got.
I think you make a good point there, Billy, because you saying that you work inside the tools that firms use, right? Well, that is so broad, right? We know that if you're a small firm, you're probably going to be sitting in Xero, QuickBooks, Free Agent. You'll have some kind of work paper solution over top, but that might be Excel. It might be Active, like we talked about before. It might be Silverfit. And then you've got the bigger firms that maybe you're sitting in CCH or Iris or Digita, and obviously you can go up a whole range and scale of different types of systems. And it's like, well, it's nigh on impossible for a firm to a business to do that, to sit inside all of those tools, partly because some of those tools you can't sit inside of because they're still on-prem. So I'd be really interested to figure out who they're actually working with in the UK. And obviously having come from the Benelux countries, Belgium and Netherlands and stuff, I suspect that probably what they're doing is sitting inside probably products like Silverfin potentially, and you leveraging that because it is a market leader in those territories. So yeah, I think saying that, it's so funny, right? When we're talking about AI now, we're kind of like we're right in that kind of like cynical zone of the Gartner curve, aren't we? And so we're just like, no, I don't believe this bullshit anymore. Who cares if you've just raised a load of money and doing something exciting? We just don't believe you anymore.
And I think when you come to figures like what we were discussing earlier, where it's like 1.5 billion valuation, you can see why people are cynical and they think the bubble's going to burst, because these organizations are getting this level of valuation and actually not yet producing enough for us to be convinced. So the kind of two don't go hand in hand. So on that note, I'm sure you've all seen the news that we're all going to be saying goodbye to accountants in 2 years. So the top dog at Microsoft has kind of come forward. He's done a press release and he said that accountants are basically going to lose the job in 2 years. Now, first of all, I think betting against accountants is not a way to get them to use your product. So I'm not really sure what his idea was here. What he should have said is probably that the role of accountant will have changed. Maybe it could be unrecognizable, I'm not sure. But I think things like judgment, client relationships, and as we've just said, trust and accountability, that can't be replaced. And I do think there will be business owners that will like a hands-off approach. I've got friends who will not make phone calls because they don't like to speak to people. There's definitely this thought of like people just want instant access to an answer. They're not really bothered about the people side of things. But then there's also a lot of people that don't want to use AI. They don't trust AI. And I don't think we're going to be able to change that narrative in 2 years. In fact, I would bet my house on the fact we will not be able to change the narrative in 2 years. I don't know if you've just seen this infographic which is circulating, and it's like a grid, and it says how like 0.3% of the population are using paid for AI tools. Have you seen that? Yeah.
Yeah, I've seen it. Yeah.
And so like, how can we go from that to a full industry is going to be eradicated in that time frame?
Well, I actually did some Googling just to try and look at the adoption of, and I always talk about the adoption of e-commerce and its widespread adoption. Really is linked to the same time around the internet and the breakthrough that came in like 1995, but actually widespread adoption didn't happen until 2010. And if you look at cloud accounting, which we banged on about for however long in this industry, the breakthrough was around 2010, but widespread adoption still hadn't happened until the 2020s. Like we were talking post COVID. So maybe if you've got generative and AI, which again was around 2023, if we're looking at like cycles, I just think that there's a bit more of a longer lag than 2 years. I think that is ambitious, but there's things like, you said it, the trust and the liability, but there's also regulation and workflows. And I think there's just, accountancy has all four of the things that would slow anybody down to having that widespread adoption across the board. I do think that that the profession will evolve though in that period. And I think that there's going to be, like we've said in the podcast for the last 2-3 years now, we were talking about having a real deficit of people coming in, juniors coming into the space. And there was a real problem with how we backfilled that. That was something prior to us talking about AI. We were constantly talking about how there was a talent deficit. And now I think that's probably okay, because that junior layer would have been under threat and probably will continue to be under threat in some way, because there's a load of tools that are doing those things that they would learn from. So the reconciliation, the variance analysis, the bookkeeping cleanup or data extraction, data cleanup, and in general. I think that we're looking at the evolution of the accountant's role into maybe something that says, in 10 years' time, you have very, very small firms. And I do wonder what will happen to the bigger mid-tier firms, because I think you'll have advisors who are able to service hundreds of clients, one strategic advisor, hundreds of clients. And so I think in 2 years, the one thing that we're seeing from John's predictions and John logs is there's going to be major workflow automation, which is the first step. And that I think I can stand behind. But to what you said, there was not just the Mustafa Suleiman debate. I did see a separate piece that was posted by Stuart McLeod, which maybe you guys also caught, a 10,000 worder. And I don't think he's drinking from the Kool-Aid. I do think that there's some legitimate points in there about what will happen. But I do think that it's like the timeline is nowhere near what anyone's predicting. I did also see Dave Selleck's Vercel app, which is like the countdown to the end of accounting. So we are definitely going to circle back to that in 18 months' time. But
What a great use of AI that is.
Exactly.
One thing I would say is, though, if with this kind of redirections, you're saying like one person, they would be able to accommodate more clients and things. For that reason, what we're trying to tell accountants and bookkeepers is you need to be better at explaining your value to your clients and like why you are so great. And if anything, this just tells me that Mustafa Suleiman's accountant is really bad at portraying their value, because he clearly thinks they don't do much.
They're probably big four, Billy. That's what.
Yeah, yeah. So he obviously doesn't appreciate what they do. So if you're listening, you need to tell Mustafa you do loads of work.
A couple of things on this. I mean, I think, the 2-year timeline is so difficult to figure out, right? And for all the reasons that Indi said, and obviously, you talked about as well, Billy. But I do think, I mean, as much as I do appreciate Dave's kind of very, very cynical take on this, and particularly with his sort of his doomsday countdown clock that he's built, I do think we shouldn't be totally dismissive of this because, if you do look at particularly the software industry, which has been massively disrupted as a consequence of generative AI, where people now can build effectively their own technology with zero skill. I do think there is an element of that can come to our marketplace, and that is a significant risk. And I think the risk potentially isn't that an accounting firm will move quickly enough to disrupt the market, but actually someone else will come in. And we've talked about this before, so this isn't new. And so the challenge there is what then happens? A little bit like we saw with challenger banks, maybe, for example. We talk about some of those people in the market. You see how quickly people suddenly shift from the terrible experience of a high street bank to a much more seamless, customer-focused experience, which isn't really giving you that many thrills. It's not really paying you lots of interest. It's not really giving you lots of opportunities to borrow money and stuff. But actually, just because it's built on an app, it's really simple to get in there. You can see exactly what you're doing. Your spending's categorized for you and stuff like that. I think that is kind of maybe some of the experience that we'll start to see. Potentially that is where you'll see a tech business come into the marketplace and do it. And it is ripe for disruption because the only regulated parts of our world fundamentally are insolvency and audit. Everything else is up for grabs. And so there is a big challenge there. And the other thing I will just add quickly as well is you talked about judgment, Billy, and I think this is really interesting because judgment comes from that accumulated knowledge and experience as a professional over a period of time. And yet we already know that any LLM that you use out there has more knowledge than you could possibly accumulate in a lifetime. What it perhaps doesn't always have is the right context to maybe to apply that to give the kind of correct professional judgment. But again, I guess over time, maybe if we see some small language models focused on the accounting sector or the audit sector or something, maybe we'll start to see that. And it'd be interesting to see how that interplays. But one little plug for me, I will just say that I did some research with ICAST last year, and that research is going to be released on the 17th of March. And you'll be able to see what we did in terms of looking at how professional judgment might change when you start to use large language models in the profession.
I think as well, just on that note, that's why I've kind of stopped saying about large language models not being able to deal with complex tasks, because in 2 years, it will be unrecognizable in terms of the complexity that it can deal with. Because I don't think as humans, and especially humans that are not kind of working within AI, we cannot fathom the rate of kind of change and the rate of which these products are developing. So the judgment aspect, I 100% agree, because I feel like that's much more difficult to train than it is on kind of the complex tax, for example, rules that they need to know about. So I think with complex tasks, that's why I didn't include it in my kind of things that it's not going to be able to do, because I think in 2 years' time it probably will do. So, Dave Selleck's countdown might be right in some respects, but in other respects it might not be.
That wraps up another episode of Digi-Tools and Accrual World podcast, brought to you, of course, by the Digital Disruptors. It's great to have some of our new guest presenters with us. So thank you, Billy, for being involved. It's always great to hear your insights and listen to your contributions and stuff. And of course, it wouldn't be the same without one of the crew as well along for the ride. So we got Indi this time around. I think Ryan's popping up in the next episode, isn't he? So We're in and out as we always are. But make sure you listen, like, subscribe, and tell your friends, because we really want to, oh my God, we really want to spread the news, and we want to make sure that the marketplace is listening to what's going on, because it's such a dynamic time at the moment.